Morning. This is a day I've been waiting for more than 2 years. Every once in a while, a great product comes along that changes an industry. One is really fortunate in their life to be part of at least one of these. Signifyd's actually been fortunate to be part of many. In 2013, we launched guaranteed fraud protection. That was just not something to detect fraud. It was a promise. A promise that if we missed it, we'd pay you back. For the first time in this industry, you actually saw e-commerce retailers able to focus on growth in new segments, new verticals, without the fear of fraud. Guaranteed fraud protection didn't just change Signified, it changed the entire fraud industry. But we took that one step further. In 2019, we introduced guaranteed abuse protection. The world had changed. Fraud had been clamped down a bit, and you saw that fraud was starting to migrate, and e-commerce businesses had to deal with the issues that came with that fraud. People were getting packages shipped to their house, and as the packages came, they would claim it wasn't received. They would file chargebacks on that. People would get products that didn't actually look like what they wanted, but instead of returning it and getting it refunded, they would actually go ahead and file for chargebacks. And this became a huge problem enough that we had to extend our promise and say, instead of just protecting on the fraud side, let's protect everything related to abuse. Once again, this didn't just change what we did at Signified, it changed the entire industry. So as you could guess, we didn't want to stop there. Over the past 2 years, we've been spending a lot of time with our retailers trying to figure out what are the biggest problems that they're trying to deal with, sitting with chief digital officers, sitting with chief technology officers, sitting in the operations teams and finance teams all across the business, trying to understand what are the biggest issues that they're particularly dealing with. And one of the biggest things that is happening in our space right now is with returns. $890 billion worth of product in the US alone was returned in 2024. Most retailers just think of this as a cost of doing business. You speak to any one of them, it's either about figuring out how to negotiate pricing with fulfillment providers or 3PLs and finding ways to be able to negotiate costs, but it's never about, is that $890 billion really what it is, and what can we do about it? And so, as you could guess, Signified being Signified, we dove deep, got into the data, tried to understand the problems, figure out where specifically this came, and the data was fairly shocking. If you break it down into the pieces that you really care about, thinking about what can you avoid from the return, for a retailer today, there's 2 other buckets that make a meaningful difference in what they manage. The first is everything related to abuse. About 20% of everything returned today has some form of abuse related to it. Let me give you some examples. People run promotions all the time. It's just the aspect of a retail business that matters. I give you if you buy $1,000 worth of product, I'm going to give you 25% off. Absolutely normal to do. A consumer comes in, looks at that offering, buys $1,000 worth of product. Let's say it's 6 pieces of things. They get the 25% discount, And at the end of that, they return 5 of them and keep the 25% discount. Now, many businesses are very good at, when the refund happens, to figure out how to reproportion that and give it back, but many businesses are not. And people are abusing that, but that's just one example. You have other forms of abuse. You have wardrobing, you have bracketing, you have rocks in a box. There's just so many different elements that make retailers have to rethink where the abuse is coming from. And because of that, they start to put more friction in that return experience. It's not a tailored experience. It becomes a one-size-fits-all. Until you ship your product back, I am not going to give you your money. That is the type of things that start to happen. But 20%, a huge number here, 20% of that $890 billion is simply related to abuse. What was even more shocking was that 26% of everything being returned is actually an operational loss. So think of it as something you could avoid from happening in the first place. Example of this, beautiful example that happened recently with one of our retailers. They sell gray zipper hoodies, and they had their return rate go up on that particular SKU, but they couldn't see all of that in their systems. They knew their return rate was going up, but they couldn't point it back down to saying what's really happening. And so as they started digging into that particular SKU, they found that other products that were made by the same supplier were having a higher return rate, but not on all SKUs. It was only the SKUs that were sitting in the large and the extra large that were being returned somewhere in the range of 80% of the time. And that supplier was using a new kind of material. It was like a bamboo material that didn't expand in the right size and shrink on washing. And so when people got those products, they were returning them. The fix is simple. You go back and go to the supplier. The hard part is having that 360 visibility within your systems and your tools internally that are disconnected across different parts of the journey to pull it all together and pinpoint, here are the 4 or 5 reasons why 50, 60, 70% of your returns are happening today. And that is a hard problem that most retailers are grappling with right now, is just that visibility into the whole thing so that you could actually do something about it. So if you really think about this whole thing, and you think that's a cost of doing business, it's actually a $1 trillion mistake that we have just ignored as a business, as an industry, and as the overall ecosystem to be able to solve for it. So if you begin to decode that a little bit as a retailer, what does it mean to you, and what are you actually trying to accomplish? You break it down into 2 parts. The first is, ultimately, you want to be able to lower your costs. If I am getting $890 billion in returns, of which 45% of it could be avoided, I save the restocking fee, the reshipping fee, and in many cases, just the abandonment, because you're like, hey, I don't want to deal with this product I got back, let me dump it somewhere. That entire cost, if you could lower it down significantly, including all of the OpEx that comes with it, that's a major savings that most retailers today just don't have the ability to do because of the lack of insights. And then the second one, if you have a customer returning a product and you've spent money to acquire that customer, at the point of the return, you have the highest opportunity to get them to buy again. Within the first 30 days is the best chances of doing it. Obviously, within the first few days is the highest chances of doing that. In the world where you were completely offline, it was easier to get a customer to repurchase. It was because they walked the aisles, they returned something, you gave them a coupon, you maybe gave them a discount, they came back into your store and they bought something. But in the world of pure e-commerce, it is hard to get that conversion to happen until they get that delightful experience that makes a difference. And so the ultimate other goal that everybody is trying to focus on is, how do I increase that repurchase rate? How do I lower my cost? And without having to pay money to acquire that customer, how do I increase their repurchase rate? And so there's lots of products in the market today. There are plenty of things that are happening in this space. Some of them focus 100% on trying to figure out how to lower your cost. They're trying to give you insights. They're trying to tie your offline to your online. And there are lots of products in the market today that focus on trying to figure out how you give you that instant refund, effectively trying to give you a chance to be able to repurchase at the point of return. At Signified, what we've been doing over the past 2 years is trying to leapfrog all of that and get to the place where we can give you one intelligent return suite that not only solves for the lower cost, giving you all the insights you need, plus the reduction in the ability to stop people from coming back when they return something, but actually get them to buy something at the same time. And so today, what we're super excited about, it's about 2 years of work. People have been working hard to really decode the problem. We're releasing 2 exciting new products into the market. Instant refunds. I've been testing with a lot of retailers, and the results are pretty staggering, which we'll talk about. And then returns insights, which gives you a holistic view, a 360-degree view of what are the reasons for why your returns are going up in the business. So let's talk about each of these. The first one is instant refunds. And I'll sort of keep it high level. There's a lot of details behind this. But at a high level, when someone comes in to return something today in the industry, we believe the future gold standard for that experience is that if you are a good person, you should get your money back instantly. The hard part is deciding how to differentiate between who is a good buyer, who has high customer lifetime value with you, who is going to give back that product without committing fraud versus the people who are going to be abusive. That's where the pieces of Signified come in. We use our massive network to identify who's a good and bad buyer, and in an instant decision, we tell you, put the money back, give this person the money back. And what we found with the businesses using instant refunds at Signified, 23% of the time, someone that has bought and returned ends up instantly buying something again with that particular retailer. 23%. Now, that seems like a small number. It's a staggering number for a billion-dollar business. If you've got somewhere between a 15 to 20% return rate, obviously every business is different. Apparel sits at 30%, maybe electronics is much lower. That is somewhere between $35 to $50 million on an annual basis that you get back on your top line without spending any extra dollars in acquisition costs for a customer. It's pretty staggering. And the best part is that if somebody doesn't put that product back in the box and ship it back to you, Signified completely takes the liability for it. In the world of guaranteed fraud protection, guaranteed abuse protection, we want to bring into the world the idea of returns protection. And that's what this particularly does. So it's an amazing product. We think it's going to be the standard of what every retailer in the world does at some point. It's going to be the de facto. If you're not doing instant refunds, it's extremely difficult to be able to say the experience is the same across every business. So very excited about that. The second product we're going to talk about is Returns Insights. And to give you a sense again of this product, it's really about giving you a complete idea of what to look for in your business that puts in perspective where the typical fraud and the typical returns are coming in, and it gives you one place to look into that insight. So a quick view of this product so that you get a chance to see it. Returns Insights brings clarity to the chaos of post-purchase. It doesn't just show you what's being returned, it tells you why, by whom, and what it's really costing your business. It surfaces fraud, it reveals abuse, but more than that, it uncovers operational blind spots, those costly patterns that fly under the radar, poor fit, policy gaps, inefficient assortments, the kind of returns that feel normal but shouldn't be. It breaks down return types with precision, so you can stop guessing and start prioritizing. And for the first time, you can actually tie return behavior to what matters: profit, loyalty, and customer lifetime value. And the result? You don't just see what happened. You actually know where to act. And you're empowered to make smarter decisions at every point in the journey, from checkout to return. So a pretty spectacular thing right now that's out there. Most retailers looking at this find a lot of value in bringing that 360-degree view to the business that puts us into perspective of how you can assimilate that data. And everyone we've spoken to and people who are sort of out there find it really hard to be able to assemble that, to connect the different pieces across the business, whether it's someone coming in online, whether it's something happening offline, whether it's the ability to understand and predict what are the types of tags to look at, the standardization of the tags. There's just been a lot of work that's gone into figuring out how do you put that together to give you a 360-degree view of everything happening within the business. Okay, so with that, those are the two brand new products we're introducing in the market, but that doesn't take away from all of the great work that has gone into the core product that we offer between guaranteed fraud protection and guaranteed abuse protection. To go back to this, in the world of machine learning products, the ability to access the data and bring in all of that information into one place, the ability to build sophisticated models that can detect fraud in real time, which has got everything to do with the artificial intelligence. And finally, in a world where machines make decisions, how do you still have control? How do you still have transparency to be able to make the calls you need to make when the machine's sort of making all of those decisions? We're going to talk about all these three components and give you an update on what's been happening within the Signified space. So first, let's start with the network. In 2024, when we last met, we were looking at about 750 million identities within the system, unique identities, everything about their buying behavior, whether this was how long they stayed on a page, what did they ship, where do they live, do they have multiple homes, do they effectively return all the time, do they only return once in a while, are there particular types of things that they do, where do they commit fraud, do they commit fraud or not? All of that information comes into us across this massive network of transactions. And over the past 1 year, we've added about 35% in total GMV into the system. We've gone from 750 million identities to almost 900 million unique identities. And that's not just the identities, it's their intent and their unique buying behavior that absolutely adds to the sophistication that we can use to train our models. And that has been a stellar part of what we've been able to accomplish over the past year. In addition to that, we've always talked about the network being the merchant network. We've expanded our network into the financial ecosystem. We work with partners on the issuing side of the house. We work with partners on the acquiring side of the house. But effectively, what we've done is taken the data that we see at the top of the stream and pass that data on to the issuers. Now, as you all know, the issuers sit at the end of this transaction checkout. They don't see the phone numbers, they don't see the email addresses, they don't see whether this transaction is good or bad. All they see is the credit card number, the CVV code, what is the zip, and potentially the dollar value that needs to be aught. That's mostly what they see. Of course, they see other things, and they work towards 3DS, and they're getting more data, but ultimately, the pipes that carry that data were engineered 20, 30 years ago, and so the connections don't drive that. What we've done is built these deep integrations into the issuers that we can take all of this rich information, combine it with the Signified network, produce the score, and pass that on to the issuers to be able to drive information. Also, we get the information back. What's happening with them? Do they make the decisions? Do they override the decisions? But what we've seen for the retailers that use Signified to work through these issuing networks, somewhere between, on average, it's a 1.5% to 2%, but we've seen results all the way up to 10, 15% lifts simply because of the richness of the data that's driving those particular decisions. So very exciting. As we've expanded the network, we continue to expand the network, and over the next year, we'll be adding more, effectively to drive the ability to give you all back a higher conversion rate while keeping your chargebacks and losses down. Ultimately, as a business, that's all you care about, so that you can focus on what you do best, selling more of your product. The second piece is all about taking that data and bringing the intelligence to it. The data in silos, without that level of intelligence added on top, doesn't drive the core business needs that you have, which is the maximum conversion rate that you can get while keeping your chargebacks and losses down. So we'll talk about the innovations we've had here over the past 12 months. There's 3 big things that I want to talk about. The first thing is the innovation in merchant data. If you look at the period of time that requires interesting pieces of new data, models are only as good as the data you collect. Over the past 12 months, we've made a pretty big acquisition of a company that's given us a new type of data that drives behavior, device, and other components that we traditionally didn't have. This company called Keynote, run by some amazing founders, had built this business to be able to connect into banks, being able to connect into individual merchants, and they'd seen millions and millions of transactions flowing through that allowed them to identify behavior types and device types that were significantly valuable to us. To be able to bring that into our network has been a big thing, and we'll continue to incorporate that into all of our decisioning. The second piece that we've done a lot in is break out our large models that we have today and figure out patterns of fraud that require mini models that can make decisions that then enhance the final decisions that come into the business. Let me give you a good example of this. Most of you, when you speak to businesses, especially businesses that aren't selling internationally, they love this debate about reshippers versus resellers. Most people like reshippers more than resellers. And the reason is simply because if I'm selling that amazing product that can't get outside, say, the United States, a reshipper can come take those products for you and figure out how to make that happen outside. And so you're able to sell in more regions and more countries than what you can do in the United States, which drives your top line, and over time, you sort of expand into those countries as you use and test them. People don't like resellers as much because let's say you're running a flash sale and you're selling the latest, makeup drop on your celebrity profile or whatever that is. If somebody came in and bought 20% of them in 5 minutes, the reseller is looking to take all that data and go out, sell it for a higher price. You probably have competition on sitting on eBay. You don't want that most of the time as the reseller. You want to be able to restrict it to say, well, reseller, you can buy 5 of these if you want. Maybe you can buy 2 of these if you want. I'm not going to let you to do something from more than this, sort of policy that you want to put in place. And the ability to be able to identify that this particular person is a reshipper or a reseller is actually a very hard problem to do. What we've done over the past, say, 12 months is figure out how to break that down and with clarity say this is a reshipper, this is a reseller, so that you within your business can segment and potentially add policies and business elements to it that can drive what you want to do. So it's pretty amazing. We've also done other things in these mini models. We've got things to identify other types of behavior, and we've got a segment of that continues to build over time. But that's just a good example of how we're using that in the final decision-making process that we have. And then the last one that I want to highlight is related to anomaly detection. And for most of you who are in the machine learning world, in the artificial intelligence world, you know that the machines are trained on data to identify certain patterns of behavior. And then they predict on that particular outcome. What happens, though, in businesses is that patterns change in real time. And sometimes the models don't pick those things up in a fast way. A good example of this is we had a retailer who added Google Pay as a payment option to their site. Within the first week, they got slammed with hundreds of thousands of dollars of losses. The ability for that retailer to have detected the change in pattern of that particular segment, not even the whole business, because in the whole business, that was probably still a small number, but to identify, hey, Google Pay got added, there's a change in traffic that happened in real time. I want to be able to take that and say, what is happening within the business, identify it, and stop it from happening quickly, requires something that changed in the business to be detected. And that anomaly detection is a pretty hard problem, because you've got to react within anywhere from like 15 minutes, depending on how hard the problem is, to maybe a couple of days. And your ability to catch that within a few seconds would be unbelievable. And that's what we've done over the past years, to build out these anomaly detection elements to catch new types of fraud, not just for ourselves, obviously, because we want to be able to catch it, but to also get you that intelligence back in real time to use it within your systems. So pretty phenomenal. 3 big things that we've done in this space with artificial intelligence. One is bring in new data. It's always the gold in our business. 2, take that and enhance it with new types of modeling. And finally, when the models don't catch it, how do you still see it? What do you need to do? And that's where the anomaly detection comes in. OK. The last piece I want to talk about is something that I think is near and dear to maybe most people in this world today. There is no meeting you walk into, there's no place you walk into without the conversation about AI, machine learning, and how it's taking over the decision-making processes, and how it's going to be super helpful to businesses. But in the same breath that people talk about AI, they also talk about how they're losing control. They talk about how hard it is for them to understand why the machine made a decision that it made. And if you look at the next 5 to 10 years of where software products are going, we're going to move away to more outcome-based products than the traditional SaaS-based products that existed in the world, which is like, hey, you've got a license to something, you've got to use it. People are going to demand that AI produces outcomes. And when you produce outcomes, that new software is going to require 2 things. One is giving you control. Yes, the machine's making the decision, but you still want to know that you're driving. And 2, when a decision is made and I have to answer the question to someone, I need to understand how it can be as transparent as possible to be able to explain that. That is the core of what we're building with the experience side of the business, where we're trying to unbox our machine learning, unbox the AI behind our decisions, so that you can have that control and transparency to run your business. So we'll walk through a few of these. These are going to be a little bit more in detail about the products, but I'm super excited for the people who use our products closely to talk about these 3 things. So the first is this concept of explore. The idea behind this is that if I can't get to my information and dig into it, if I can't get a source or an input or an insight that tells me what to look for, I am not going to be able to dig into the vast amounts of data that I have. And so we'll walk through what this is, but ultimately, it breaks down your fraud and abuse categories for you to be able to understand it better. So think about your banking app. In an instant, it untangles thousands of line items into categories like rent, health, groceries, and tuition. That simple act of sorting raw data into simple, understandable categories is what turns disorganized into discipline, and discipline into better decisions. We're bringing the same crystal clarity to risk. Every order racing through your storefront is now automatically filed into payment fraud, account fraud, delivery fraud, or abuse elements like item not received and significantly not as described. Then we zoom in. Inside each category, we show you the exact MO. Account takeovers, carding attacks, reshipper schemes, address manipulation, triangulation fraud, and more. You no longer have to see a cryptic decline code. You actually see the story behind it, the motive. And we go one level deeper too. Each order actually carries its own why. That is the value of what you're going to be seeing here in the business. And one of the things that you'll continue to see with what we're trying to build with Explore and Fraud is giving you that ability to dive deep and figure out what's happening within it. But then the next question that naturally comes to every business as you're reviewing this, as you're digging into your data, is to really understand the why behind this and being able to drill deeper into it to investigate what's happening within this particular thing. Whether it's an incident happening on your business, I talked about the Google Pay incident, to be able to drill in deeper, to be able to find a pattern that actually makes a difference. And so the second thing that I'm going to show you here today is how are we going to do risk assisted by AI in your investigations. So let's take a look. We're all drowning in data. The hardest problem that's being solved today isn't the math. It's having access to clean data and choosing where to begin. We dive into spreadsheets, thousands of rows deep, and dashboards that look like cockpit controls. We need to be able to use AI to understand in real time, in context, what is happening, and take focused action to investigate, validate, and resolve a problem. Your data should come to you. You shouldn't have to chase it. We're building a unified workspace that opens with context already in place. Critical alerts float to the top, spotlighting the anomaly that truly matters. One click pulls out the raw record so you can slice, filter, and group at will, and your friendly AI colleague is always present to help. You want to test a new hypothesis? Tweak a filter, rerun the query, and watch the visuals reshape in real time. You iterate, you can refine, and then repeat until the signal is undeniable and the path forward is super clear. That's the power of AI-assisted investigate, and that's what we're sort of bringing to the world today. It is super powerful. The people who use this and will continue to dive into it, what they love the most about this is the ability to really understand the why behind what's happening in the business. Now, not every person who uses or works with Signified will be that deep into our products, but ultimately, when you get into the people operating on a daily basis, wanting to understand what's happening within the business, this is what they do every day, is trying to dig deep. They're answering questions to someone else. They're trying to find the answers to the why, and our ability to answer that in real time with our investigation capabilities is going to be a big part of it. So we've talked about two things. Explore, which gets you to a general idea of here's a problem. We've talked about investigate, which goes deep, and it tells you and helps you answer the why. But now that you've done that, the next question on your mind is natural. What can I do about it? Going back to the control within your business, this is the most important element of it all. And so we're going to talk about the last part of the business here, which is act. How do you act on insights that are provided by AI? Let's take a look at that. We love to solve, obviously, hard problems here. They stretch our talent, they spark growth, and pull us into new things. But solving the same problem on repeat, that's a poor use of your time and a poor use of ours. It just stifles innovation. That's why assisted AI is such a game changer for our platform. It keeps the brain power focused on net new challenges. You start with AI-assisted policy creation. These are educated assumptions, often full answers, generated without writing a single line of nested logic, so anyone can act like an expert. Then take it further. We package that human insight, inject it into the engine, and let it work quietly in the background, scanning ahead, spotting problems, flagging anomalies, and recommending next actions. Really, assisted AI is a co-pilot, not a replacement. It accelerates breakthroughs, automates the mundane, it drives consistency at scale, and it hands every team back what matters the most to them: the time to solve the next unique problem. And so, putting this all together, the most important thing here is that we are trying our best to sort of bring together three of the most important things that you care about the most. One, all of that unique network data. We're up now at 900 million unique wallets, unique buyers. We see all of that buying behavior. To be able to look at that across a network and put it together with the aspects of artificial intelligence coming in and combining those insights, which then brings you to the ability to not only explore that data, investigate it to answer the whys of your business, and then actually put control back in your hands to act on it. That is the power of what we're doing at Signified, and that is what we've been building over the past 12 months and continuing to enhance. I want to take a minute to really appreciate the product and the R&D teams here at Signifyd. This has been a 12 months whirlwind of evolution, a lot of innovation that's happened. There is just the pace at which we're moving, we have never moved at that pace. The industry is changing. We're all going to be dealing with things coming up with the tariffs and the uncertainties that come with it. But what we can control is our ability to solve the problems that matter the most to these businesses, to the people sitting in this room. And that's what we and the product team have done a great job. So congrats to the product team. I just want to... So last thing, as I close up here, this morning we've talked a lot about innovation. We've talked about technology. We've talked about navigating change. But I'd actually like to close my talk reflecting on what truly sets Signifyd apart and what genuinely motivates us. It's not the tech. It's not the products. It's actually our relationships with you all. And this, I want to put this up here. I want you to look. Some of you may recognize your faces up here. So this is not stock photos that we're pulling off something else. This is Signifyd employees with all of our customers. They're beautiful, and there's lots of data in that. And so you take a minute to look at that. But while we pride ourselves on the technology, we actually care about what is most important and most deeply human. It's the trust and partnerships we build together. And so we see ourselves not just as a tech company, but an extension of your operations team. If you want to pick up that phone, if you want to text us, you want to call us, we want to be there by your side in those difficult moments. And so in this conference today, you'll hear lots of inspiring stories. You're going to hear innovative solutions. You're going to see that booth where people are going to walk through different products, and you're going to hear fresh ideas. But remember, what truly lies in this world is the relationships we build together. And so I want to thank you for your trust. I want to thank you for your partnership. I want to thank you for a belief in Signifyd. Together, we're not just navigating this uncertainties coming up, but we're thriving because of it. Thank you all.